Hello and welcome back. Pumpkin spice season is ending. Prepare yourselves as the clocks turn back. Tax deduction season is coming. Have no fear. We're here to prevent you falling back into bad habits that hamper your growth, impair your cash flow, and damage long-term success for your business and family. I'm Jay Fagan, founder of the Maddox Group. For nearly 20 years, I've been helping small businesses and families just like yourself throughout California and across the nation achieve transformative growth. So let's get stuck in. What is tax deduction season? We hear it everywhere as we come to the year-end close. From the car dealer, the farm store, to your most active vendors, all are reaching out. Because come year-end, there is a frenzy to buy. Everything's on sale. Black Friday deals, Prime Day discounts, sales tax holidays. We've got to sell, and you must buy. What's all that about? What is a tax deduction, and when did they get so popular? Tax deductions, at their core, are government incentives to buy things you may need or want in your business or personal life. They're generally geared toward improving outcomes and metrics within the local, state, and national economy. Over the decades, our government and our markets have incentivized year-end purchasing. Taxpayers are looking to minimize their tax bill, and sellers are looking to realize their year-end sales goals. Historically, this frenzy originated around the August-September timeframe, which is the end of the government fiscal year. Government agencies, state and federal departments needed to spend the last bit of money they had in their budget. Then they could report back to the legislature that they had spent all the money that was allocated to them and plead their case to receive the same amount or more in the coming fiscal year. I remember when I was a kid, my father once managed a robust hardware store in the small town I grew up. This wasn't your Ace Hardware. This is your old school hardware store. They had everything from yard implements, farm equipment, paint, lawn tools, and auto parts, to yarn, decorative horse statues, household goods, and trinkets. You name it, they had it. Traditional old school hardware store. And I tell you, come September, he was ecstatic when tax deduction season's first wave of acquisitions kicked off. He loved it, because that's when the government agencies would come in and buy paint by the barrel, and they'd buy equipment galore and tools by the crate, all because they needed to spend what was remaining in their budget. So why do tax deductions exist? Our government, in and of itself, is a business, a fairly unique business for sure. It doesn't exist to make a profit. It does seek to return much of its income back to its shareholders, the taxpayers, though not in direct correlation to what they put in. It is nonetheless a business that uses various policy tools to enact change that helps it to continue existing as an entity. And one of those tools is tax policy. Tax deductions and credits are all at their core designed to incentivize certain behaviors in society and disincentivize other behaviors that the government thinks are beneficial or detrimental to its long-term growth and success. Case in point, the child tax credit. Now, as any parent can attest, it costs a hell of a lot of money to raise a child today. It's a phenomenal amount of money. But every year, if you're within certain income thresholds, the government will give you money per your eligible child as a credit against your income taxes. For 2025, it works out to a max of $2,200 per child. Now, $2,200 is budget dust when it comes to the cost of raising a child each year. But the government does this because it wants to incentivize having children. Why would you think that be? Well, if we have more children, we have more future taxpayers. We have more workers, people to get the gears and levers of the economy working, keep the government moving forward. So we have the child tax credit. Other deductions are incentivized to encourage economic growth and activity, such as manufacturing services and the transport of goods and materials. These deductions all fall under the purview of our good friend Ron, reasonable, ordinary, and necessary business expenses. Ron is your best friend when you're thinking about buying things for your business. Is it reasonable? Is it ordinary? And is it necessary? Traditional businesses utilize advertising and marketing to get you to do something beneficial to that business. Our government does the same. They just call it tax deductions. Tax deductions are the government's advertising budget. So when you're out there at the end of the year and you're thinking about buying something for your business, if your first thought is, if I buy this, I don't have to pay income taxes. Well, guess what? You bought into the marketing. What your first thought should be is this reasonable, ordinary, and necessary to the growth, success, and legacy of my business? That's really what our friend Ron is all about. Now, often we think of the tax code as, is this an allowable deduction? The reality is, if you're in, say, a barbershop or hairstylist, you need a good pair of clippers, maybe even a couple of pairs. You go to the store, you see the shiny, fancy, and oh so expensive gold-plated clippers. Well, is that reasonable, ordinary, and necessary? I'm not talking about it here from a deduction standpoint. They're likely a legitimate deduction for tax purposes. But are they a good deduction for business purposes? Because folks, what I want you to get your mind around here when it comes to deduction season is, am I buying things that move my business forward? Are they reasonable investments in my business? Are my competitors buying similar things? Are they necessary? Gold-plated versus stainless steel, filigreed and engraved, or just bog standard gray? Is it getting the job done at the best value? It's nice to have things that look good. It's nice to buy things that make us feel good about our business and what we're doing each day. There's nothing inherently wrong with wanting nice things. Understand, though, the trade-off between success and appearance can be steep. So if you buy something because it makes you feel good, makes you want to get up and do your job every day, makes you want to be successful on behalf of your clients and deliver great service, and if you've got to pay a premium to do that, great. If you can do the exact same thing without paying a premium or without even buying it, now that's gravy on the biscuit. Is it necessary for your business? Are you buying something because you need this to move your business forward? Does it help you get a return on your investment? You get more revenue, you serve your clients faster, more efficiently, deliver a better quality service. Speed isn't everything, right? Particularly in this day and age when we're trying to differentiate our businesses from one another by the experience that we deliver. If you're making an investment in your business, particularly businesses that are client or customer service focused, are you making an investment that raises the bar, allows you to charge maybe a bit more premium than your peers, ensuring that you have a better client retention? Clients are coming back again and again because of the experience that you deliver as a result of this investment. Then I believe that falls firmly under the term necessary. If we stick with Ron, we're going places, and we're going to like the places that we go. Now, what ultimately is a tax deduction in practice? A tax deduction is spending a whole dollar on someone or with someone else in order to save roughly 25 cents on your income taxes. I say roughly because we have a progressive income tax system. You're watching my videos, you've heard me talk about the various tax brackets, 10, 12, 22, 24, and so on. If you're residing in the state of California, where we do have a state income tax, and several states don't, but we do, and we also have a progressive state income tax. So if you're residing in California, you're a married couple, and you're bringing in just under $400,000 a year, your effective income tax rate is somewhere in the ballpark of 20 cents on the dollar. It means for every dollar you earn, you're not going to pay more than 20 cents in taxes, state and federal combined. Now, if you're single, that's pushing maybe a little closer to 30 cents on the dollar in that same $400,000 range. Because these tax brackets are large, if you're married, filing jointly, you can be making up to $600,000 and still have an effective tax rate roughly under 25 cents on the dollar. What that means is that you spend a whole dollar on something for which the government will grant you a tax deduction. At most, you're getting 20, 25, maybe 30 cents on the dollar back in reduced taxes owed to the government. You're still out 70 to 80 cents. So if you're not spending those whole dollars on things that will help you create more dollars, you're just chasing tax deductions. You sure aren't chasing wealth, growth, and prosperity. The surest path to wealth and success isn't found in tax deductions and credit card rewards. It's found in steady, diligent, and fervent commitment to growing your income and your assets and minimizing your expenses, your debts, your liabilities. So what are some of these tax deductions that are available to businesses? Because most of these are geared towards business. Well, anything, as we've said, that's reasonable or necessary to run your business, those are legitimate and easily deductible. Purchasing equipment, buying qualified business vehicles, rent or mortgage interest on a business property, employees and contractors, materials, all generally fall under qualified business deductions. Some may even have extra benefits in the year you purchase them, such as an accelerated deduction of high-cost items like large pieces of equipment. You can get that through bonus depreciation, which was made 100% and permanent with the 2025 OB3 tax bill, or Section 179 expensing, which has been around for a long time. Now let's be clear about all these deductions and about reasonable, ordinary, and necessary. Ron isn't working on behalf of the IRS, much to your dismay. You might hear that a lot when it comes to discussing tax strategy. Well, my guy, he's working for the IRS. He's not working for me. The idea there is that somehow your tax professional, your financial advisors, not giving you the guidance that would help save you on income taxes because they're afraid of an audit. Now, risk is real, and risk mitigation is a factor that smart, savvy people should consider in their overall decision framework. The reality is tax audits represent a minimal risk for most taxpayers. Fundamentally, when we're talking about whether a business deduction is reasonable or necessary, whether it's a sustainable choice, we're not really talking about whether there's an audit risk. We're talking about whether it's a good decision for you and your business, period. Certainly, risk mitigation deserves consideration, because to do something that you know is inherently illegal or ill-advised, it's just morally, ethically, and intellectually dumb. To do something that might be a little risky from a tax perspective, but is wholly risky from a life and business perspective, that's just plain stupid. There's no sugarcoating it. To take your hard-earned dollars and spend them on other things with other people that may or may not result in a tax advantage to you, but would certainly result in a poor outcome to you, all under the guise of, well, it's a deduction. I can write it off. That's just plain dumb. Ideally, you sustain a working relationship with your tax advisor, your financial advisors, your trusted professionals to really get to the heart of what drives your goals and your objectives. What are you trying to achieve with your purchases and investments? Consider then, is this decision going to pay off? When the answer to that question is yes, and there happens to be a tax advantage for doing it, that's just fantastic. That's exactly what we're looking for. We want good, smart choices and investments with your income. When those choices happen to pay off for tax-wise, that's a cherry on top. When they pay off financially and in your growth and development as a business owner and in your family, that's the golden ticket. That's how we build multi-generational wealth. So you've satisfied Ron. Your purchase is a tax deduction. Now, is it paying you first? Fundamentally, when I work through all of this with my clients and in my own life, I'm asking myself the question, if I'm spending this dollar, is it paying me first? There are deductions that are geared completely and totally towards paying you first. The best of these, which benefits all taxpayers, irrespective of whether you own a business or not, and it's my personal favorite, is the pre-tax retirement deduction. This is your 401k, 403b, your traditional TSP, or traditional IRA. You're essentially deferring your current tax liability to future you. You're paying whole dollars to future you and potential taxes to a future government to save on your taxes today. That, right off the bat, number one, best, simplest, easiest tax deduction you can take to reduce your taxes now and grow your future wealth. And there's a lot of back and forth about whether you do Roth first or pre-tax first, traditional. My feeling is this, plain and simple math. Statistically, across the country, people who are working and earning an income have a higher effective tax rate in their working years than they do when they retire. Now, the Roth is a hedge that statistic may be wrong, that in reality, what we've seen in practice for nearly 20 years might not pay off for everybody, and there are outliers to everything. So my feeling is this, maximize your pre-tax first. Put all the available money you have into that first until you hit your allowable cap. And then when you have excess income to put into a Roth, you do that too. You can have both. But don't give up the tax advantage today for the fear, good old FUD, fear, uncertainty, and doubt that you're going to owe more taxes later. Because in reality, most retirees, that's never the case. Pre-tax retirement, that's a winner, winner, chicken dinner. The second one, if you're qualified small business owner, is the Qualified Small Business Income Deduction, or QBI. This deduction is simply making as much money as possible because you can get a 20% deduction on your profit, your taxable income. So just making money gives you a tax deduction. You don't have to do anything else but be successful. You don't have to buy anything. You simply earn Business income. How great is that? Now, number 3 on our best of list is going to be a health savings account or an HSA. Now, I have a lot of feelings about the health insurance industry, as I'm sure so do many of you, and just the insanity of the cost of healthcare in general. And there's huge opportunities for reform there. However, we do get sick. We need doctors. And we live with the healthcare system we have, not necessarily the one we want or that we deserve. So if you're a small business owner and you're looking to save some money on the ridiculous cost that is health insurance, I'm going to look at a high deductible plan that is health savings account eligible. That's paying whole dollars into a tax advantage, pre-tax savings account that you can invest. You control it, you can invest it. You can put it into an index fund, into the market. Let it grow. And when you need it, you pull those dollars out for qualified medical expenses. That's a fairly broad spectrum of allowable medical expenses. And it's totally tax-free. Further, you can grow this account throughout your life. Treat it like another retirement account. All qualified medical expenses well into retirement are tax-free distributions from that account. And once you hit 65 and older, if you take the remaining income out as a regular retirement account distribution, you only pay the ordinary income tax on it. You don't have any penalty once you hit 65. So all around is a great plan. Save money on those health insurance premiums. Get you an HSA when you qualify for one. Now, lastly here, there are a few new tax deductions that non-business owners can utilize as of, as I said, July 2025 with the new OB3 tax bill. If you're in an industry that receives overtime, a portion of that income may now be deductible, the new overtime deduction. A new tax deduction is available for tipped income workers, and a new tax deduction for financing the purchase of an American manufactured automobile. And I'm not a big fan of financing purchases. However, if you're in the 20 to 30% tax bracket and you have to buy a vehicle for your business or you need one for your personal life and you must finance it, a new tax deduction now exists. Further, standard filers, people who don't itemize on their taxes, may now claim a deduction for gifts to qualified charities. Educators, great teachers in our communities, they now have an expanded deduction for materials that they buy for their classes and their students. And seniors now benefit from a special deduction just for being a seasoned citizen. Now, ultimately, the way you pay less taxes in America, you have less taxable income. Our society taxes income. Anytime you hear about some business owner or other perceived successful taxpayer who isn't paying any taxes, well, guess what? They don't have any income. They don't really make any money. That's really what it comes down to. You can bring in hundreds of thousands of dollars a year in sales, and you can pay zero taxes if the cost of making those sales resulted in no taxable income, or the cost of acquiring equipment, materials and supplies, vehicles, tools, resulted in tax deductions that reduce that income to zero for that year. Deductions, right? So to do all of that, in order to pay less taxes by almost every metric, you're paying your whole dollars to somebody else, just for the privilege of paying our government a few cents less. It's not necessarily a great strategy for life and growth. It's far better to make as many of those whole dollars as you can. Pay the government their fair portion, not one penny more, and keep the rest in your pocket. When you're making those purchasing and investment decisions, and they do move the needle, they do move your business and your life forward, and they do help you to build growth and wealth. They're helping you create a prosperous future. And taking advantage of the tax code, where those incentives come into play, that's smart thinking. Tax avoidance is paying only what you owe and using every tax advantage that makes sense in your favor. Tax avoidance is a fair and sound strategy when it makes sense for you. Pay yourself first. Tax evasion, that's a whole different kettle of fish. So to recap, it's tax deduction season. Now go out there and take advantage of all the deductions that work for you. But don't let marketing and advertising and incentivization from the government shape your choices. Make those choices based on what creates wins for you, achieves success for your business, your family, and your desired future. I'm Jay Fagan. Thank you for investing your time with me. Should you need a trusted advisor who's advocating for your success and walking with you throughout your business and financial journey each year, connect with us today. Let's get Team Maddox working on your behalf. I wish you great success in your business and in your life. Till we meet again, allons-y.